What is the message from these ASEAN leaders as they gather with other key partners, including GCC representatives, against this backdrop of trade and tariff upheaval?
Hi, Dan. Thanks for having me back. So I think the message from ASEAN is we're open for business, right? So in the context of what we're seeing, where you're going to get a bifurcation in global trade, where you're going to have certain companies and countries producing mostly for the North American market, this doesn't change the fact that the rest of the world is going to be open for trade. And I think what ASEAN is doing with China and GCC is saying, look, we're approaching this from a multilateral perspective. We want to continue to push in terms of having strong trade ties and build deals, and essentially that they're open for business and trying to find new partners. And specifically for ASEAN, a lot of ASEAN economies export somewhere between 10 to 30% of their exports to the US. And so those tariffs cause a huge headwind for their economies. And so they're looking for new demand centers. And the good news is that actually ASEAN economies, they don't export that much, somewhere between maybe 3 and 5% to the GCC. So that's a great opportunity. At the same time, the GCC, they have high GDP per capita levels, which means they're good consumers of kind of higher end products. And lastly, the Middle East is going to grow this year. It's going to accelerate compared to last year just because much greater oil production, as well as limited direct impact from the tariffs, because the oil is somewhat kind of excluded from the tariffs. And so the Middle East, from a growth perspective, offers an opportunity. I think the challenge for ASEAN, however, is that GCC is only about, 60 million people, and that pales in comparison with the 340 million consumers in the US. And so this is kind of one small step in the direction of trying to diversify their markets and find new demand centers.
As you say, the crisis is real here for some of these ASEAN countries, where US tariffs on exports go as high as 49%, clearly having a significant negative impact on the region's growth outlook. But again, when you point to the solution here, Cedric, you mentioned that the GCC has a role to play at the moment, accounting for only 2 to 5% of ASEAN exports. So how quickly do you think that can grow, and can the GCC realistically fill the trade gap that's being created by these US tariffs?
I think it'll take some time, but we saw that the GCC is very interested in increasing the depth of its technology stack and really investing in technology, AI, and ASEAN economies produce a lot of chips and types of goods which go into that. So I think it's an opportunity for sure over the long term. Whether you can pivot in 1 or 2 years, that's probably a little bit harder, but I think the long-term strategy makes a lot of sense. The other way to think about this is, as ASEAN economies also develop and continue to invest in AI, they're going to have huge demand for energy. And don't forget, ASEAN's already a very big consumer of energy because of their strong manufacturing base. And so with their energy consumption likely to rise over the next 5 to 10 years, it makes a lot of sense to build strategic partnerships from a trade perspective with the region's largest energy, or the world's largest energy region, the GCC. So in that sense, it works well for both groups of countries. And the last thing I would say, which I thought was particularly interesting, is the role of China. So the fact that China is also involved in these talks, to me, is interesting because it's kind of trying to preempt protectionism. And I think Beijing is probably thinking about it in 2 ways. So the first one is probably that part of the trade deals with the US could see some growing protectionism by individual countries on a bilateral basis with China. So China is probably trying to front run that and help to kind of shape the types of deals that are emerging and really lead some of this kind of multilateral effort around trade. And the second thing is, I think Beijing is trying to position itself in the global economy as a leader of multilateralism and trade, which is in sharp contrast to the more adversarial approach that you're seeing from Trump. And so I think there's a kind of political angle as well as an economic angle here.
Indeed, and it's so interesting to see China front and center at this summit, which of course the United States would also be watching very closely, given the close ties that the US has to some of these ASEAN nations. On another topic though, Cedric, of course, in our part of the world, we see the Gulf sovereign wealth funds out here becoming more active and more sophisticated globally. That includes deploying capital into some of these key markets across Asia. What trends are you seeing right now in terms of that? And do you see some of the Gulf sovereign wealth funds shifting more capital into Southeast Asia as a result of this alignment?
Sure. I think as we get more trade deals and you have a deepening of these trade relationships, then investment flows will naturally follow, whether that's in public markets, private equity, direct investment. I think we'll have to wait and see. But I think this strengthening of trade ties will accelerate that. In addition to, a lot of sovereign wealth funds are thinking about how are they allocating their assets and their portfolio across the global economy. So if you assume that the U.S. is potentially a less reliable partner for the next 10 years, do you want to diversify a little bit out of the U.S. and maybe move into other economies? If that's the case, well, Southeast Asia has a good business environment, good structural growth drivers. And so I don't see why you wouldn't want to look to invest in ASEAN, for example. Good demographics as well. I think the challenge there is, this talk about the end of U.S. exceptionalism is probably a bit premature. The U.S. still remains the deepest capital markets, the most liquid capital markets, and still has very strong governance from a corporate perspective, very high profit margins, etc. And don't forget, it was just only a couple of weeks ago that Trump was in the Middle East, in the GCC, attracting a lot of investment and seeing a lot of GCC economies commit to investing in the U.S. in very large numbers, but also committing to importing a lot of U.S. technology and other exports. So I think it's more about a rebalancing and a rationalization of some of this investment rather than an outright pivot.